But it's definitely not just an accident of geography that that's where the local authority boundary happens to be, honest. We're about 13 years old as an institution, 7,500 people locally use us and our members, about 1,400 junior savers as well, who have either a saving account or a child trust fund account. About 15 staff now. We've got, not all full-time, probably around 12 full-time equivalents, but 15 people. And about £4 million in local people's savings that we look after. We only lend out money that we've actually got, which is quite a big difference between us and some of the other institutions out there. And we do really try and make things as simple as possible. So we have people who save with us, we have people who borrow from us, we have people who use us as their primary bank account. So we offer a full current account with debit card and access through the Link network, through the international Visa system to your cash. That's pretty much it. There's no kind of investments in collateralised debt obligations, whether subprime or not, or anything else that even I as an ex-banker would struggle to understand. And apparently all the other bankers struggle to understand as well. So it's quite a nice simple model. And we have the various products that we offer. We try to make sure that they're all accessible, so that there are no minimum saving amounts. For example, you can save from £1 upwards, which is to try to encourage everybody to be able to join and be able to play a part in the credit union. Our loans start from £100 up to 15,000. Most banks, if you go and try and borrow from them these days, it's a minimum of at least 1,000, and in some cases 2,000. Which is not much help if you're living in Southmead and your washing machine's broken down and you just need 250 quid to sort it out. Your options in that sort of case, I'll come on to shortly, but they're very limited and very, very high cost. Bristol, obviously this slide is at least 3 weeks out of date, because the Bristol Pound is no longer in the future, but is here with us. We do offer now as well, we're able to accept businesses and organisations into membership. So in legal terms, they're called corporates. They're not actually the corporates that you might imagine when somebody says the corporate. It's not probably going to be the likes of Tesco or Barclays who come and open an account with us. It's more the local charity, local sports club, local businesses that have already come and open accounts with us and can continue to do so. But hopefully in a few years as well, we'll be able to look at doing mortgages. Basically, the more people there are who are members, and the more people who do more of their financial business with the credit union, the more that collectively we're stronger and the more that we can do. So it's very much the case that the more people that are involved, the better, a bit like the Bristol Pound. Why we're different? Well, we are a little bit about money, because we are providing financial services at the end of the day, but much more than that, we're about people. So really people are far more important to us than the amount of money that those people have. As I say, whether you've got £1 to save regularly or irregularly, in fact, or you've got 10,000 to save, you have an equal say in the running of the credit union. You're of equal importance to what we do. And we try to make sure that we embody that in how we do things as well. So we don't have an 0844 or an 0845 number that you ring when you want to talk to us. There's a local Bristol number. In Bristol, we are in Stoke-Croft, so people know where we are, hopefully most of the time. We don't have big screens in our branch, so it's not that you walk in there and you're immediately a remove from the person who's there serving you and is there to help you. We deliberately don't have those so that we can interact with people, we can listen to them, we can understand what's going on in their lives, good or bad, and really try and work with people rather than just seeing them as an account number or a value in their account or anything else like that. It's very much about people. We are able to take a long-term view because we're not there to maximise profit. We're there to provide a sustainable service, so we do need to make a profit so that we can continue to invest and to grow. But any profit that is made doesn't go anywhere other than back to members, either as a dividend on their savings or in the form of extra services. So there's no outside leakage in the sense that there is with a bank, because at the end of the day, as somebody who's worked in banks for quite a long time, before I saw the light and escaped and joined the credit union, the primary goal is to make as much money as possible for the shareholders from those people who are customers. We saw a bit of a joke in marketing where I worked, which was that our goal was to make people thinking they were getting as good a deal as possible, whilst confusing them enough to make loads of money, which obviously worked quite well in a lot of cases, because people got missold a lot of stuff, and that basically is because either things were so confusing, not only for the customer buying them, but also for the poor sods who were selling more on the ground, that people just didn't understand what they were getting, and they were getting something they didn't need.
Are you FSA regulated?
That's a very good question. Yes, we are. Okay. So, like banks or building societies, we are FSA authorised and regulated as the term. So we have a specific set of regulations that apply to credit unions. They're stricter than those that apply to larger institutions, and they limit what we can do in terms of investments and things, which is actually not a problem, because we wouldn't want to be doing a lot of what has got the larger institutions into trouble. I'm a big fan of keeping it nice and simple, so that even an idiot like me can understand it, because that seems to be a way of making sure it works and doesn't all fall apart. It does also arguable. Apparently other people say not, so I'm just happy to accept the how it fits. One of the big benefits of being an FSA regulated institution is that we do have coverage by the Financial Services Compensation Scheme, in the same way that any bank or any building society does. So if the worst ever did come to the worst, if you're in a bank, if you're in a building society, or if you're in a credit union, you're always going to get the first £85,000 of your money back. And that applies whichever regulated institution you're with. So yeah, in that sense, we're just as safe as they are. Arguably, you could say we're safer because it's simpler and there's not as much chance of things going wrong. Equally, arguably, you could say it's less safe because we've not got quite the resources that Barclays might have. And probably more importantly, we're not so big that the government can't afford for us to fail, which is the big thing that banks have relied on over the past few years. That they are too big to fail, literally, that they can't be allowed to fail. If you're the Dunfermline Building Society, for example, you were allowed to fail because you were that big and the government didn't really mind. But there we go. The only way that we can change that, really, is by having more people joining institutions like the credit union or other credit unions in different places, smaller banks, and actually moving money away from them. So that just come back to the cost of borrowing. It's one of the starkest examples of the difference between what we do and what is out there for people. The example that's there of a loan is one I took from a website not too long ago, so it's from a payday loan company, and they have a very reasonable 30% per month interest rate, which equates to a mere 3,000% a year in APR sales. So next to nothing. I mean, it's affordable. Interestingly, completely legal. People often talk about loan sharks and how bad it is that there are loan sharks in society and stuff. The really, really crazy thing about the way things are set up in this country is that if those loan sharks could just manage to fill a form in and send it off to the OFT and become licensed, they could continue doing what they're doing happily and legally, because there is no cap on interest. There used to be. There was at one point a long time ago, and there are caps on interest rates in most European countries, and a lot of American states have interest rate caps as well. For whatever reason, we don't have one here, except, in fact, for credit unions. Our maximum interest rate is capped in law, but obviously that doesn't work as a concept, because otherwise it applies to everybody, wouldn't it? So the example that I like to give, it's not the payday loan example, that's a very high interest rate, but the one that's most prevalent around, particularly some of the estates in Bristol and in other cities as well, and the villages as well, is a largish provider of small sum loans, which if you borrow £500 from them over a year, you'd pay back how much in interest, do you think?